Hi there, welcome to this weekend general update for the 17th of November. And I think we may have had a reversal in the US market on Friday night. It's not guaranteed, but it's looking a very high probability. So the correction that we've been enduring over the last few weeks may well be over. So pretty pivotal night overnight. So let's get into the action. Just a reminder first though that this is general advice only. So the S&P was down 20 points on the week, but as I said, the reversal last night is, I would probably rate it as at least a 90% probability that the market has now bottomed and turned, but we'll know that in another week or so. But it's certainly, my view is enhanced by reversals in other markets off some key levels, and it was despite some very poor trading in Europe. All the European indices were down and closed on their lows. So the reversal in America occurred after Europe closed, which is even more positive. Now, the ASX 200 ended up losing 126 points last week. So we had a couple of rough days, but I would expect to see that turn around on Monday. And if you look at the period since the US election, the US index is down about 6%. And our market is down a little over 3%. So we're still outperforming the US. So it was a pretty nasty week for large caps, but small caps did turn around on Friday and were probably the best performing index sector. So that's a real positive when you see the small cap index outperforming everything else at the end of a pretty negative week. So I take that as a real positive as well. Now the US dollar reversed precisely off a resistance level and then closed on the lows. These technical signals are not 100% perfect, but this is as clean a reversal signal as you're likely to see. So I think it's highly likely the downtrend is likely to resume in the US dollar, and if that's the case, then we should see stocks start to rise again. Bond yields in Europe weren't very much changed on the week. The Spanish 10-year rose very slightly to 5.87 and the Italian eased very slightly to 4.87, so not a lot of change there. Now gold ended up losing $20 on the week, but is still looking pretty positive. But to really indicate that we're going to head in a continuously higher direction, then we really need to see a close above 1735, and we haven't quite seen that yet. So let's have a look at a few charts. So we'll start with the S&P, and we had three retracement levels: 1395, 1370 and 1346. So pretty clear cut levels. You can see we had several nasty days down. This was the first day after the US election. The second day the range was less. We then had a couple of days of pause. The market failed to bounce and it then started down again. We got another day of pause on Thursday, and then on Friday night we got to a low of 1343, so just a couple of points below that support level, and then it quite abruptly turned around and finished almost on the highs. Now you'll notice that the RSI was quite oversold, and the last time it was down at that level, as you can see back here, which was the turning point in June, there was quite a sharp rebound, and the market went from 1270 all the way to 1470. Now the ideal is if you form a lower low, as we did here, and then but a higher low on the RSI. Now that's the perfect setup. We don't have that this time. We've just got a straight low, and it can just turn around and reverse straight up from here. But if we happen to form a lower low from here, and I don't think that's a high probability, but it's possible. If we perform another lower low, but we form a higher low on the RSI, then that would be a signal to really pile into. But as I said, I believe, looking at some of the other indicators that we'll look at in a minute, I believe that this looks like a pretty robust turn to me. So let's look at the other important ones. So this is the US dollar index, and it tends to run in the inverse direction to the stock index. Now I've overlaid two retracement scales on here. On the first retracement scale, the shorter one, we had resistance at $80.60. Well, the market went straight through that. But on the bigger one, which is taking it off the peak on the 24th of July, our first retracement level was at $80.73, and it went through there. The 50% retracement was $81.41, and overnight the market got to $81.45. It then reversed, and you can see closed on the lows. That's quite a definite reversal signal, because the previous day it was looking fairly positive. It was looking very positive intraday, and then turned around and closed right on the lows. The RSI very close to being overbought, so that's a pretty high probability to me that we're likely to see further downside. So to me that enhances the US a little bit. Now let's have a look at Apple. We had support here at around $520. You can see the price was significantly oversold, and again that's a very clear-cut reversal in Apple on big volume. Now at this level, it's hard to see Apple going much lower than this. It's already fallen $200, so I think that's a very, very positive sign as well for the turn in the US market. Let's have a look at our market, and I don't place very much emphasis in the Australian index because it's really not telling you anything about the broader market. So just really for the record, we had retracement levels at 43.57, which we went through, and the next one is 42.87. Our market closed at 43.36. So in between those two levels, it's getting down to being pretty oversold at this stage. And I think the point here is that it's possible we might get some more downside in the Australian market, because the banks seem to have made a bit of a change around, and so really you've got to start to look at specific selected stocks, which there are the ones that I'm mostly focused on at the moment have actually outperformed the Australian index in the last 2 weeks significantly. They've either gone up slightly, some of them have gone up to 10% higher, and at worst most of them have only slipped by a very small amount. So most of the stocks I'm focused on have outperformed the Australian index by a considerable margin anyway. Now let's have a look at gold. So this was gold. You can see we basically rebounded up to this 1735 level and are struggling to get through it, but a bit of a pullback and a bit of a pause is pretty normal. If we look at this on a weekly chart, it's a little clearer, the bigger picture. So we really need to close above this level here, which is at 1735. So close above there, and I think we'll be back challenging 1800 and then beyond. So things looking very, very positive for gold stocks, or sorry, for gold. Now let's have a look at the gold stock index. We had support at 440 on the HUI index. We actually got down below that. We got down to 430 over the last couple of days, but again a good reversal from oversold. It's also happening outside the Bollinger Bands, so that's a reversal outside of a statistical extreme, so therefore the odds are very much in favour of this following through to the upside. So certainly some very, very positive signs there. Copper steady at $3.45, hasn't done very much in the week, and similarly with oil holding between $86 and $87. There's a 6-month chart on copper, so you can see we haven't really moved much in the last few weeks, and that is still very profitable, very robust levels for copper. So overall this is the strategy that I'm pursuing at the moment. It's not a guarantee, but I believe there's a high probability that the US correction is finished and we'll get a rally into the end of the year now. As far as the Aussie market goes, my observations are that you still need to be highly selective. There's probably less than 30 or 40 stocks that I'm at all interested in. And they are largely the premium gold producers and some non-resource businesses that have just got superb financial performance. So that's it for this week. I think if we're not at the point of a rally into Christmas, we're fairly close to it. So take advantage of it and have a good week trading next week. Cheers.